Slithering salutations and welcome to the 2020 edition of Halloween Horror Stories from The Real Estate Guys, a pandemic poltergeist of dastardly deals that went alarmingly amiss, yet provide powerful lessons for real estate investors. It's another spine-tingling installment today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the 2020 electrifying edition of Halloween Horror Stories, a creepy collection of catastrophes that happen to real-life real estate investors and the lessons we can all learn. We'll start out this year's villainous volume with one we call The Case of the Clever Criminals. Our first Halloween horror story of the year comes from a real estate investor and syndicator who's no stranger to Halloween horror stories, as he shared more than a few in past years. Please welcome back to the Real Estate Guys radio show, Mr. Sep Bacom. Hey, Sep.
Hey, Robert.
People think, well, the last thing I ever want to do is be on Halloween horror stories. But one, it's therapeutic. And two, I think you can learn so much when people go through something and you learn about it. And this is one where you've just had some really interesting circumstance, but you have found kind of a cool solution. So tell us your Halloween horror story this year.
Yeah, the solution was found through a lot of blood, sweat, and tears, unfortunately. So hoping that this will be beneficial to the audience. So for a while in low-income neighborhoods, the big fear that a lot of investors have is that thieves and vandals will come in and break into a vacant house and steal the copper. And that was an issue for a while, but the copper prices have kind of come down a little bit. So it hasn't really made sense for thieves to go in and rip copper wires and plumbing out of the walls. It still happens, but there's other easier low-hanging fruit for them to steal. And more often than not, that low-hanging fruit is the air conditioning systems. And those are really expensive. They cost thousands and thousands of dollars.
Right.
So in the beginning, we could have outdoor air conditioning units and they would just sit there and nothing would happen. We'd only have to service them when they go broken. But over the last couple of years, one by one, those would just get up and walk away mysteriously. And this happened in multiple markets. So we just went through a series of challenges of trying to find a solution to adapt to these HVAC thieves. They would, it's very easy for them to just turn off the power for air conditioning unit and unplug it, disconnect the Freon lines, and then go sell that in the secondary market.
Well, and I think there's another thing about it. You mentioned this idea of the copper thieves, and we've certainly seen that over the years, but they got to get into the house. And most AC units are outside of the house, and so it's relatively easy pickings. And yet, and I know many of the markets you're in, you have hundreds of single-family houses. It makes sense for the AC unit to be outside the house, and these are markets that get hot enough where you really do, as the landlord, have to provide air conditioning.
Yeah, and it's something that could be a decision where it could be a make or break for the tenant to either choose to rent your house or someone else's if it does have the HVAC unit. And just for any of the listeners who are new, the reason you have to put it outside is because those condenser units generate a lot of heat. So you can't put it inside like the furnace. So in order to cool the house, it has to exhale a lot of heat. So when we had the first couple of units being stolen, we thought the security systems would help, but that didn't do anything. So we started installing rebar around the units. So we would basically have a couple posts of rebar around it, and that worked for a couple weeks. And then the bandits would come over and just basically lift the air conditioning unit outside of the rebar. So then we tried installing rebar over the cage. So it kind of looks like it's inside of a spider web. And they were able to get some type of metal clipper and adapt to that and basically cut the rebar and remove the HVAC cage from there. So then it's all right. Well, what else can we do? So then we started looking at putting in copper pipes, like plumbing pipes, and having a welder come in and weld a cage, basically custom fit cage. And they were able to find pipe cutters and access it from there. Then we tried pre-assembled security cages where it would mount to the side of the house. And we thought, okay, this has got to be good. This is steel, and it's made specifically for this. And again, that worked for a couple of weeks. And then they were able to unscrew the cage from the house and remove the unit from there. So at this point, it's like, all right, well, what else? So we started just getting the property managers together and asking, well, what other ideas can we try that we haven't? And they suggested, instead of just having rebar or cages attached to the house, maybe we have concrete pads and have the cages basically bolted into the concrete through there. And yes, it is more expensive, but it's cheaper than having to replace an air conditioning unit every time. So we did that, and that reduced about 80% of the HVAC vandalisms.
Okay, so let's stop there for a second. These are commercially available, or you had to figure out a way to engineer these on these concrete pads so that the clever criminals couldn't figure out a way to break and get them away?
Yeah, most of the HVAC vendors, like the technicians that install the units, they have the capacity to install a concrete pad. There might be some type of like pre-manufactured assembly or like, basically pre-manufactured pad or platform you can put beneath the unit, but it generally just is more practical to pour the concrete there and then put the AC unit on top of it, then put the cage. The cage is pre-assembled, but the concrete is basically produced on site.
Yep.
So that worked for a while again. And there was still an issue on a couple of houses that had big open yards where the vandals would put their truck into the backyard, get a chain and hook it up to the cage that was bolted into concrete, and they would just drive and their truck would basically yank off the cage from the concrete. So at that point, it was really frustrating. It's like, oh man, I mean, now it's like, what else? It's like a concrete and cages can't even stop them. There's got to be something else.
Wow.
So got together again with the team and just did as all entrepreneurs do, is try to problem solve, right? Like, this is a problem. We got to find a solution. So we did some research, and basically we realized that the moment that the thief realizes that no one is home, that's when they're more likely to steal it. Like, we didn't have, I don't think we had any vandalisms on any houses that were occupied. It's always when there's no one home and there's no one alerting the police.
Yep.
So we realized that we had to basically find out when exactly the HVAC thieves disconnect the power to the unit so that they don't get electrocuted, because there's 240 volt power. So the moment that they disconnect the power, that's where we got to sound an alarm or have the HVAC unit notified, like, hey, something is going on. So we did some research, and we found a company that had a product that it's a commercial product. They weren't really targeting it for residential houses, but you basically have your installer connect it to the HVAC Freon lines or the condenser lines and to the power, so that it knows that when someone is trying to steal a unit, it'll send a trigger to an alarm system. So now those houses with those yards, we have the cage and the concrete, and we have these systems in place so that as soon as the vandal comes in and tries to steal a system, it'll sound the alarm and the police will be dispatched. And finally, after thousands and thousands of dollars poured into trying to find a solution, we found something that works and is able to prevent it.
All right. Well, I know it was a long road to get there. The property manager, I mean, I imagine you're not the only guy that was having this problem. So did they kind of see this issue across the board with their rentals?
I did have actually another friend with the same property manager in one market that he had it occur on a B-class property. So it would happen, but it generally was more problematic in more of the lower income neighborhoods. And I actually talked to another friend that was a Real Estate Guys listener, and I shared this experience that we had with trying to find a permanent solution to the HVAC cage theft. And I told him about the cages and the concrete, and he said, "Oh, that's actually what Terry Kerr does in Mid-South Home Buyers. He's one of Terry's clients for the turnkey properties." So it was a good feeling knowing that, okay, Terry does that. I don't have any properties with Terry currently, but he's got a good reputation. We just had to learn it the hard way, doing it out of market with other teams. But it's something that our property managers in those markets are actually sharing with their other clients so that they can prevent them from having their houses get vandalized as well.
Well, good tribal knowledge for sure. If you only have a single rental house and someone steals your air conditioning, it's a pain. And it's almost easier when you have a large portfolio because it's kind of spread out, if you will. But I know you raise money. Epicom Investment Group, you guys do syndications and you raise money to go out and buy these properties. And so that's going to be something you don't want to have to explain to your investors. Hey, we keep losing AC units. Those are costly. And so this sounds like a great ounce of prevention. Although it does cost a little more going in, you're sure going to save that in the long term, just knowing that you've got a really good chance to never lose your AC unit again.
Yeah, and I think that's the mistake a lot of slumlords make, is that they would rather not spend the extra money to prevent it. It's which is one of those things. An ounce of prevention is worth a pound of gold.
Well, it is. And in this business, keeping tenants happy is what keeps the rent coming in. So when their AC is working, that's awesome. When you get that call and they say someone stole our AC in the middle of the night, well, you're upset, right? Not at them, but you're upset and you got to spend money and it takes time and they're going a few days without air conditioning. It's just a downward spiral. So sounds like a great solution. Congratulations on that. And thanks for sharing this year's annual Sepicom Halloween Horror Story with us.
Thank you, Robert. Pleasure.
There's Sepicom from Bacom Investment Group. Moving deeper into this year's repulsive repertoire, our next disgusting dilemma is entitled The Costly Confidence Crusher. Our next awful story comes from a gentleman who always seems to be smiling, so he must get through these things okay. Let's say hello to, all the way from Spain, Billy Keels. Hey, Billy.
Hey, Robert. Nice to be here.
Always good to have you with us, and maybe not this week because it is Halloween Horror Stories, but as we're talking about, that's how we learn. We learn when things go bad. You had a situation where not everything turned out perfectly. Tell us about it.
No, so far from perfectly. And you know what? This, I guess, is a story of being a little bit lazy and overconfident, kind of the mixture of those two things. And so this actually was going back a bit, but there was my third rental property that I purchased. It was actually a duplex. And like I said, I was a little bit overconfident and I had some previous success. I purchased 2 properties before and everything was going just fine. And, one of the things that I always read is, hey, listen, whatever you're going to do, make sure that you do your due diligence, you get your home inspection. And I'd done that the first time and I read through the home inspection and it was great. And I kind of walked the properties and I saw the things and I'm doing this all long distance, right? Because I'm living in Europe and investing exclusively in the United States. And I flew back and I saw the property and everything went well, except there was just kind of one small problem. And that I got the inspection report, but I kind of forgot to read through it. As a result of that happening, I ran into a pretty big problem, but it didn't happen right away. And I guess one of the things that happened when I didn't read through the property, there was probably about, I want to say it was like 7 or 8 months later, there was a unique or normal city inspection that was happening for the property. And when the city came through to inspect the property, they detected a couple of issues, and the issues happened to be, Robert, they were on the roof and the overhang near the roof.
Yeah.
And so that part wasn't so fun because remember, I'm now back in Europe. And so all of this happens and I absolutely start scrambling all over the place because I knew that there was going to be a really huge fine if we didn't get this fixed quickly. And at the time, my team wasn't really structured the way that, the teams are structured today. And so it caused a lot of stress. It caused a lot of anxiety. And I was really scrambling to find a general contractor in the area. Of course, I was telling the story of what my problem was. So I'm sure that because of that kind of last minute things that the prices probably went up a little bit. I'm gonna guess a little bit about that. And then it took them a while to find the right roofing company, and everyone came out. It just became a lot of inconvenience for myself, for my family. Right, my wife was stressed out because I was stressed out, and I had family back stateside that were trying to help me, and it was just really not a nice situation because, also too, we had residents that were in the property that were being inconvenienced for this whole thing.
Yeah. And, that's the reality of it. But this is a great story in the sense that, one, you're through it. So that's good. But two, this happens, right? We get on a roll. Things are going well. We've done a few properties. We get it's like, oh, yeah, I'm going to get a report. But, I'm busy. And you don't necessarily read it. And, this is how things manifest. We had a similar situation. It was on Halloween Horror Stories more than a decade ago about a guy who was buying a property a month. He was really rolling, and he bought a property, and in the property inspection, it suggested he gets an additional foundation inspection, which he decides, I'm not going to do because I know this area, I know this market. Sure enough, almost the same story. A year later, there's an issue, and they discovered that, in fact, this property, which was over 100 years old, never had a foundation. Literally, the guy who inspected it, he said, I'm not a foundation expert, so he called for a separate inspection, and what our investor should have done was to get that inspection done. So not uncommon for houses back then. Basically, the wood built directly onto the dirt. And it had stood that way for 100 years, but now a pretty big problem. So your problem wasn't quite that big, but these were things you would have found in the inspection report. And I think the big thing is, had you have gone through the inspection report, you would have made a decision then. Either this is something we should deal with now, and perhaps you could have negotiated something with a seller. But at the very least, you could have decided, hey, we can do this before there's a tenant, or, maybe it doesn't have to be done right away. In this case, the second inspection made it that much more difficult because now you were forced to deal with it on a time frame that wasn't yours.
Yeah. And and that was exactly, you just described it, because when I went back through to actually read in the inspection report at the time, I saw that they made reference to some of the issues that were happening. So I felt really, really bad. And that's why I guess I say that it was maybe overconfidence and being lazy and having had that early success. And I just didn't read it. And it was very clearly in the inspection report. And I thought, well, you know what? Exactly what you said. Could have at least gone back to the seller, tried to renegotiate at least those things that were there, or would have known that it was something that we would have done right up front. And so I guess at the end of the day, it was a pretty expensive at the time lesson for me. It cost me over like 20 grand. So that was a learning opportunity for me. And guess what? Whenever I have an inspection report, or now my teams have them, we definitely make sure that we read through them and make sure that if there are any issues that need to be addressed, that we do that before we sign on the dotted line.
Well, I love your attitude. It is a learning opportunity. And when you pay a lot of money for something like this, then you do pay attention. See, if you had not read the report and no big deal, no harm, no foul, you might continue that practice. But lo and behold, no, now we have a new standard. So that's the obvious lesson, right? Read the report. Any other nuances, any other things that came up because of this that have you changing your way of doing business?
So one of the biggest things was, I realized also too, is just really having a team in place and making sure that the team understands the market, and we have a network to be able to tap into, because at that time it was early on and I really was doing things in a way that I didn't give enough respect to having a strong team in the local market. And so that was definitely one of the places where focused a lot of the time and a lot of the energy, is making sure they have the right team in place that can address these and other types of issues.
Well, Billy, it's always critical, as you've learned, to have a great team, even more so when you live thousands of miles away from the property. So having a team just gives you that comfort. Doesn't mean things aren't going to happen. When they do, someone can handle it. You get to play quarterback and manage the team. But boy, when you don't have that team in place, it can really be frightening. And we appreciate your candor and your great Halloween horror story. Continued success to you, my friend.
All right. Thanks, Robert. Appreciate it.
It's Halloween horror stories, things that went dreadfully wrong, and the awesome lessons we can learn. Today on the Real Estate Guys radio program. In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2021 Goals Retreat, January 8th to 10th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events, or call 888-489-7723, extension 18. Get your life back on track, physically, spiritually, and financially. Attend the live in-person 2021 Goals Retreat on the second weekend of the new year. Click Events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today. Welcome back to the Real Estate Guys radio show, heard every weekend on this bellowing broadcast beacon and all the time at realestateguysradio.com. We're glad you're daring enough to join us. In fact, come join us in person for our 2021 Goals Retreat in January. In these unprecedented times, it's a tremendous opportunity to focus on your future and design the life you were meant to live. You'll find all the details at realestateguysradio.com under events. It's our annual eerie episode of Halloween Horror Stories, and the next perplexing predicament is a critical lesson we call Frightening Flames from Afar. This next fiery tale of woe comes to us from an investor we know well. He's been in the business a long time as a buy and hold investor, real estate syndicator, and broker. Let's say hello to Randy Hubbs. Hey, Randy.
Hey, Robert. How are you?
I'm doing well, and I know you're mostly doing well, but if you were doing completely well, you wouldn't be on Halloween Horror Stories. This is a crazy one. Tell us what happened.
Sure. Well, we were at the New Orleans Investment Conference last November, and flying back from the conference, ironically, we were looking out, flying over our town of Kennewick from 30,000 feet as we started our descent into Seattle. All of a sudden, my text went off, and I got a message from our property manager in Abilene that we've had a major fire. Please call as soon as possible. And so once we landed in Seattle, we got the lowdown. We had 52-unit property there in Abilene. There was broken down into different buildings, and one 12-unit building burned completely almost to the ground. It was completely gutted. Then there was roof lines connected and attics connected that took it into another building, which did extensive smoke damage there. So we had a real mess on our hands, but the most important thing was that, we had to figure out what was going on and whether everyone made it out okay. And as that turned out, the good part of the story is that no one was hurt or injured. So thanks to the police department there.
Well, and I remember you sent out the the link to the clips. It's never good when your property appears on the news, but you had reporters out there and all these shots and newspaper stories and so forth. So there's the trauma of that, dealing with that. A little backstory in this, though, because you and I had talked about this property and you owned it for a while and you were actually thinking about maybe it was time to sell. And all of a sudden, you're handed a whole new problem. So the outcome changes totally. But take us through the decisions you had to make, the work that's had to be done, the timing, and kind of where it all is almost a year later.
Sure. Well, we were 2 weeks away from listing the property. And so when I had a number of people interested in investors, and we were kind of doing that dance, and then this happened, of course. The first thing that happens is, of course, like you said, watching the news reports and seeing what's all going on, the extent of the damage. We had just come off the tail end of another fire that we had here in our local market, one of our smaller duplexes, actually. And so this isn't the first fire even then. And so dealt with a lot of fires and floods and have handled a lot of these things ourselves. And so what was interesting was that got home and the phone starts ringing. And of course, this guy's contacting me, and you're obviously guarded when someone's, calling, and it's like the vultures swoop in, if you will, right?
Yeah.
But at any rate, I listened to this guy. He's a good old boy out of Texas, and, he was talking very compassionately. I was impressed with his sales skills because he was very, very genuine, and having attended your guys' training, I stop and listen to a lot of those things now. So he wasn't selling it real hard, but what caught my ear the most was that he was an insurance adjuster, and I'd never heard of that person that actually is an insurance adjuster for you. So he's now offering to take all of the headaches of dealing with my insurance company off my hands, because they do this all the time, and his specialty is multifamily. He's right out of the DFW area there. He said, I can do all this for 10%, and I can guarantee you I'll make you probably more than 30% from any kind of negotiating and deal you'd do. So I immediately got that really caught my ear, and especially being from Afar. Here, we're clear up here in Washington State, and now all of a sudden, we're dealing with one of these issues in Texas, and it's never fun dealing with your agent's great, but now you're talking to somebody new whose job is to get as much money as they can for their company. And sure enough, these guys went to battle, and it took quite a long time, but big help, big relief for me on that deal.
That's such an interesting point, and it's probably something that, even though you've been a broker for decades, you hadn't run into, because it isn't that common. We have a claim, and the insurance company has an adjuster that they send out, and their job, even though they're usually super friendly people and you're their customer, is to try to make sure they're not paying out too much. And when you have an adjuster on your side, it's a different dynamic. And so talk about just how that whole process came to be, and any challenges to get it through, and then how long till you could get the work done. What did you do with the tenants that were displaced? That kind of stuff.
Yeah. Well, starting with the tenants, they, here we go again. We've talked about this on a prior story. Even renter's insurance is so important. And with our property management company we have here locally, we require it. And I couldn't get the other property management to require it. They felt that people were running just too tight of margins. And so unfortunately, only 2 of those people had renter's insurance. And the news information is still online. You can Google apartment fire in Abilene, and it's pretty tear-jerking. One of these poor women, she was crying, and everything she had was of course smoke damaged and in her car, and that was her life. And so it's real sad to see what happens to these poor residents. But we were able to get some of them over into the other part that received no damage. We only had a few vacant units, though, and then my property manager is also, as you guys always say, you want to find someone who owns property, and she actually has a 77 unit not far away from that, and so we were able to put some folks in there, and the rest of them were basically out on the street and on their own. But the process was interesting because, like I say, it took quite a bit of time going back and forth, and these guys, the insurance company that was actually with my insurance company that I had the policy with, they left things off. 300-page documents, and they left things off like, oh yeah, we have to replace the roof, or HVAC, or things like this, big ticket items that were missing. This fire happened November 6th. And I think we finally got a settlement in February, and then COVID hit.
Yeah.
The other side is we had to find a contractor to put it back together. Abilene's a small area. This is a big apartment complex for contractors and what they can do. And finding a general who could do that locally, I was a little nervous. And fortunately, the gentleman, the owner of the company that works on our behalf as the adjuster, Doug, had some great relationships with contractors. October 4th, I believe it was, you guys were in the DFW area, got hit by 4 tornadoes that touched down, and there was ridiculous, there was billions of dollars worth of damage, and so there was quite a chore to go through and interview these guys, because most of them wouldn't think about, they had so much work they didn't have time to go to Abilene. But one of the highest recommended companies that they had on their list, because they were talking about how well they were at communication, things like that. So the company that we selected, G2, there out of DFW, has had a guy on the ground doing general all the way through this. I get daily updates with pictures included. So, the communication has been fabulous. So that part of it's not the horror story at all. It's more the timeline. Here we are with COVID-19, only 10 workers allowed on site. The insurance company is saying you got to have it built in a year, and they weren't willing to budge on that. But fortunately, we got another 10-month extension. So we're on our build back of the smoke damage area, and it's been pretty amazing what these guys have been able to negotiate. This was a late 1960s built apartment complex with a boiler and chiller, and also we had in this case, all bills paid is a term that they use in multifamily. And, we're paying all the utilities because of that system. There's no way to allocate it out. But we're looking at the complete rebuild of 12 units plus another 12-unit building and a 4-unit building. So 28 units total that'll be individually metered on their own HVAC system, everything brand new inside. So good progress being made, but it's slower because of the only 10 people on site right now.
Well, you don't wish this to happen for anybody, and the whole idea behind insurance is to make you whole, not to make your building better. But you don't build a new building with a chiller system and common area, single point utilities. That's not the state of the art today. So hopefully when it's all done, you're going to end up in decent shape, and certainly happy to hear that nobody was hurt. I think the big lesson here has to do with the fact that you can have an insurance adjuster on your side. What other lessons did you come away with from this, Randy?
Well, just trying to do your own, what I have done so much, it's kind of like being your own landlord, of course, and it's harder to find a company like this on a smaller deal, but when something on a larger scale like this happens, I mean, these guys are great. I mean, they throw their name out there. They're right there, Continental Adjusters, that they actually, when we were on the summit and we were in Puerto Rico, the big building that we toured there that was being restored, they are representing that, and they got another, I think they got almost $50 million more from the insurance adjusters. And that's the amount of time in that project, the size it is. That was for, 3-4 years ago? And, it's just incredible what they're able to recoup for you and save, so many headaches, and you got professionals working on your behalf.
Well, I love the calm, cool approach. I remember when it happened and we were together, and I'm instantly thinking, well, we just aired Halloween Horror Stories the previous week, and already we have our first one for next year. So I wanted to make sure we definitely checked in with you, even though it's not, the smoke hasn't totally settled, if you will, in terms of the buildings being completely done. It sounds like you're on the great track. So thanks for sharing with us today, and continued success. Most of what you do is successful in real estate, but if you're in it long enough, bad things are going to happen.
Absolutely. Thanks, Robert.
There's Randy Hubbs. It's Halloween Horror Stories this week. Chilling tales and the lessons we all can learn on the Real Estate Guys radio program.
When the world changes, investing strategy changes too. The coronavirus is disrupting economies, financial systems, and daily life like nothing in modern history. Sheltering in place might protect you from the virus, but a wait-and-see approach to investing now is like pulling the sheets over your head while the house burns down. It's not the time to be complacent. So we're calling our huge network of thought leaders, seasoned investors, and technical experts to find out what they're seeing, thinking, and doing to mitigate risk and capture opportunity, and we're recording all of it. We're calling it our Coronavirus Crisis Investing Webinar, and it's totally free. All you need to do is register. Remember, mainstream media doesn't talk to real estate investors. They don't understand you because Wall Street pays them not to. That's why the Real Estate Guys are here. To register for the Crisis Investing Webinar, simply send an email to crisis@realestateguysradio.com. That's crisis@realestateguysradio.com. Real-world wisdom is the best vaccine for a healthy financial future. Send your email to crisis@realestateguysradio.com.
Hear ye, hear ye. Registration is now open for the Real Estate Guys 19th Annual Investor Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year are sales legend Tom Hopkins, the editor of the Gold Newsletter Brian London, international real estate developer Beth Clifford, and Jim Rohn's 18-year business partner Kyle Wilson. And joining us live and in person for his 9th Investor Summit, Peter Schiff. Plus, returning for his 9th Investor Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. Plus, lots more to be announced. It all begins June 11th in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Summit and make plans to spend a week with the Real Estate Guys, Peter Schiff, Ken McElroy, and an all-star faculty on the 19th Annual Investor Summit. Welcome back to the Real Estate Guys radio show and podcast. Thanks for listening. Tell a friend about the Real Estate Guys. You can sign up for our weekly newsletter by sending a quick email to newsletter@realestateguysradio.com. It's Halloween Horror Stories. And before we get back to the pandemonium, It's time to play Real Estate Trivia. That's your chance to win a prize by knowing today's Real Estate Trivia question, which of course is going to have something to do with Halloween. As soon as you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. That's trivia@realestateguysradio.com. You want to include your name, the answer to the question, and your mailing address, because if you're the winner, we're going to send you an awesome book called Life-Defining Moments from Bold Thought Leaders, a collection of inspiring stories that will help anybody get over the horror of Halloween. Before we give you this week's question, last week on the Real Estate Guys, we were talking about the new reality of retail real estate with Michael Flight. We asked this: where in the world are retail leases most expensive? Well, lots of good guesses. The answer is Causeway Bay in Hong Kong, where retailers paid $2,745 per square foot in 2019, followed by Upper Fifth Avenue in New York at $2,250 per square foot, and New Bond Street in London at $1,714 per square foot. Ouch. Here's our real estate trivia question for this week. It's the scariest holiday of the year. Candy corn was invented in the 1880s and originally had no association with Halloween. In fact, it was sold seasonally from March to November. But after World War II, advertisers began marketing it as a special Halloween treat since its colors matched those of the fall harvest. Here's our question: where was candy corn invented? Yeah, you're probably munching on it this time of year. Where in the world was candy corn invented? If you know, or just want to guess, send your best answer to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. The first person that gets it right is going to get life-defining moments from Bold Thought Leaders. That's today's Halloween edition of Real Estate Trivia. Our next horrific hardship is one we call the mysterious missing money. This wicked wizardry comes from a returning Halloween Horror Stories contributor, a great guy that helps investors with alternative financing sources, Billy Brown. Hey, Billy.
Hey, Robert. How you doing today?
I'm good. You know, we were talking before we started here that it's hard to come up with a Halloween horror story this year.
A little bit different. You know, I think I may be the only one in 2020. I mean, for the most part, I think people have done pretty good in 2020. I mean, no issues with any lockdowns or evictions.
No.
So I may be the outlier. So,
well, I know you spend a lot of your time helping real estate investors, but it can't all be roses. Otherwise, you wouldn't be here on Halloween Horror Stories. So tell us what happened.
Well, I'm one of the few lenders out there who's actually an investor myself, and I don't know why. I like to get myself more brain trauma, but to decide this whole investing thing is pretty good for the long haul. Listen to you and Russ, but we actually do have an apartment complex that we bought last year that was all roses. We were actually on this last year because someone died the first day we bought it. Now we get into 2020. We're a year into this thing, and three fun things happened all in 2020, COVID being one of them. But the biggest one was, we had a construction loan on this, and we go to get to talk to the lender about getting reimbursed for the said construction loan. And guess what? Crickets. We had no idea where to find the lender or our point of contact there. It took 3 months to be able to find that person. We applied for our reimbursement in January, and in May, we finally got it.
Wow.
Yeah, which, if you're going to go ahead and do $400,000, $500,000, $600,000 in rehab and get chunked at once, that kind of affects your distributions. Along the way, it just so happens that we checked in the accounting, which is a little bit off. You're like, wait a minute, you guys haven't distributed any funds from our rents in quite a while. What's going on here? It's like, well, you guys owe us for maintenance. It's like, what do you mean maintenance? So you owe us maintenance over here. It's like, no, that's capital improvements. You have an account over there for that. And that took another 4 or 5 months to get straightened out. So they basically double billing us. We had no income from that coming in. And then we started looking deeper into the books, and things that cost, $98 to go buy at Home Depot, they were charging us $1,800 for.
Whoa.
Yeah. So they probably took us for a tune of $150,000 to $200,000 on the construction side, plus all the time to be able to get reimbursed from the lender and all that fun stuff. So, and then COVID happened. We had COVID happen, and then a cold front came through the very next day. And the guy caught his blanket on fire in his little space heater. smoked out that unit as well as 12 others. It was just a fun march.
Are you beginning to think that maybe this wasn't the right property? I mean, folks probably remember last year the story that you alluded to where you get the unit and close and instantly you have a death on the property, which isn't anything to laugh about, but these things happen. And you think, well, we got it over with, right? And now, boy, more and more. How much of this is related? These sound like maybe they're just disrelated things.
They're disrelated, but they're dominoes, especially because of the property management and the accounting and all that. So you talk about the big takeaways there is you have to have, there's a reason why there's the thing called an asset manager. Fortunately, my wife is very good at she's a controller by day. So she was on that, as well as our project manager, who is, by the way, a former Marine and Six Sigma certified.
Nice.
He would make Russ's eyes turn cross-eyes when it comes to spreadsheets.
Awesome.
Love him. So he got down the weeds. He's been at the property back and forth and just rode the property manager as well as their team to be able to get this thing right size. New property manager, all that seems to be on the upswing. Fortunately, through all this, and this is why you have reserves. This is why you buy it right, not on hopium. Project is actually still performing. We're about 97% occupied.
Awesome.
That's fantastic. And we should eventually be able to get the distributions here pretty soon. But being able to go through that, I'd say probably 9 out of 10 folks that I know of would not have caught what we caught.
Well, and it's a good thing you did, obviously, because it's led to this big number. And yet sometimes these things go unchecked for years. So when you got the complex, is it the same property manager, or did you bring new management in when you guys took over?
We bought a highly recommended property manager from our realtor on board. They had all the certifications and all the clout and all that. And we just kind of trusted them and said, okay, well, we checked out. We did lots of interviews with them as clients and all that. It checked out. But once we got in there, the construction side and the accounting side and all that just was not matching up. We thought we could coach them into doing that. And there was an impasse as far as what they either wanted to do or knew how to do, or just like weren't willing to do. And that's the point where you got to know your accounting. You got to know what CapEx is. You got to know what maintenance is. What things cost, what it should cost for labor, how long it should take, and to be able to manage the managers. Unfortunately, we had that experience, and that goes to, again, why lenders want people with experience borrowing millions and millions of dollars for these things. When it comes to this, because it's not if, it's when. You got to know what you're doing.
It's such a good point. When we talk about managing the manager, that isn't just a phrase. I mean, you really do have to know what you're looking for. There's this old saying, you can't expect what you don't inspect. So if you're expecting a property to give you returns, you need to make sure you inspect the books and the numbers and confirm and trust but verify, as Ronald Reagan would say. So this is a great lesson for a lot of folks. Hopefully you're getting the lesson that even though you hire a reputable manager and even though it seems like everything's working, you got to take a closer look. I think there's just been a lot of folks talking about how COVID has just collapsed timeframes in a way. It's sped up things and it's exposed areas that might have been exposed eventually. Do you think that had any play in this? Did you learn earlier than you might otherwise have, or did this just show up when it showed up?
We had suspicions on the front end just because we know. I mean, I see P&Ls every single day. This Six Sigma certified, my wife does too. She knows it. It's like it just wasn't adding up, and then COVID hit, and that gave us a little bit more time to go dive a little bit deeper and ask bigger questions. I don't know if it really sped things up, but the fire did reveal weaknesses in the team. And that was what, really sped things along to go find a new property manager and go ask those questions. You got to ask great questions if you want to get great answers. You're talking about your money as well as your investors' money. You better be dang sure you know how to manage that. If you're trying to manage to a certain number, you better be able to do it to be able to set those expectations with your team.
All right. So zero-based thinking, knowing what you now know, what would you do differently moving forward, Billy?
We probably would have called them out earlier on the overbilling and just the construction side. I don't know that Chris could have wrote him any harder, but he did give him a long leash. He maybe could have shortened that leash a little bit, but you just got to ask those questions. We probably should have interviewed 1 or 2 more property managers and not just that one. Although they did, they seemed all nice and shiny and all nice and pretty, but we should have probably checked out a few more. But again, the one thing we did do right, and this is a great thing about real estate, if you buy it right, even though there's troubles, it will eventually get back to profitability if you manage it right. If you buy it too high, then it can only go downhill from there. So that's what kind of what we learned there. And I see team members, man, you gotta know who your team is.
Yeah, such a good point. And I think also another, side benefit of this lesson is it can happen to anybody. I mean, you're a guy that's in this business, helping people, get loans and dealing with lenders all the time. And yet here's a situation where the lender was non-responsive. And so this happens to all of us. And I think we have to be ready. We can't feel like we're invincible just because we've been to the party before. You never let your guard down. You always need to pay attention.
That's the biggest thing. Like, the great thing is it didn't shock us when this happened. We just adjusted course. Somebody that was newer would have been shocked and wouldn't know what to do. What questions to ask, who to ask them from, where to go. Fortunately, Syndication Mentoring Club, we had those people to go draw upon. We had the team, knowledge, resource to go do it, to attack the problem that we've never encountered before.
Well, it's good to hear that things are in line and working, and that's what you have to do. Sometimes with Halloween horror stories, it's just something happened. You got to take care of it, do what you got to do, shrug it off, and live to play another day. Billy, always great to hear from you. Thanks for sharing with us.
Hopefully this is the last year I'm on here.
All right. Well, we'll see whether or not 2021 will be another opportunity, but we appreciate you today. There's Billy Brown. It's Halloween Horror Stories, tales of things that went terrible and the lessons we can learn. Today on the Real Estate Guys radio program.
Don't be like Charlie, who scans the internet for IRA information, often getting bad information from copycats who have no idea what they're doing. You deserve to work with a reputable firm that specializes in one thing, the EQRP. Lucky for you, Congress just made it possible for you to get up to $200,000 out of your current 401k or TSP, so you can invest that money in real estate or even your own business. Even if you're still working, it's possible to get access to all this money tax-free. Whether you're a full-time investor, a doctor, or a government employee, even if you have employees, the EQRP is your secret weapon. You'll never see this strategy in Money Magazine, only here with the Real Estate Guys. Every major accounting firm in America is quietly sharing this strategy with their wealthy clients, helping them get their funds freed from 401k jail. Hi, I'm Damian Lupo, and we have your solution. With the CARES Act expiring soon, this strategy will be gone forever. The EQRP company is ready to help you unleash your retirement funds now. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report today.
And welcome back to an unusually unnerving episode of the Real Estate Guys radio show. Hey, if you're ready to do bigger deals using other people's money, then get registered for the Secrets of Successful Syndication, our 2-day event on raising capital and vetting deals and deal makers. It happens live next March in Dallas, Texas. All the details are at realestateguysradio.com under events. It's Halloween Horror Stories, and we've got 2 more revolting recitals before we're done. This next monstrous memoir is entitled The Backstabbing Bandit Brother. Investing can be great, but investing can be scary. And here to share a Halloween horror story with us, a gentleman who actually was on the show last week. Welcome back, Michael Flight. How are you?
Hello, Robert. How are you doing today?
I'm great. Long time no see. Not really. We had you on the show this week talking about retail, which is fascinating. But you've got a Halloween horror story that doesn't have to do with retail. Tell us what happened.
Sure. Well, myself and a partner who is a local real estate broker, we had been fixing and flipping houses from about 1999 through 2013. And we decided to ramp it way up when the housing market crashed in 2008. And so there was a bunch of portfolios and there was just a lot of product out there and you could buy it at a good price. And so we went out and actually raised money from a Canadian institutional investor. I was the kind of the tax matters partner, the financial partner, making sure that the construction was done, paying out the contractors. And my partner, Jim, was the guy that found the deals and then sold the deals. And so he knew how to price it and all the rest of it. So it was a very good partnership, but I had way too many other things going on at the time. And so I wasn't paying attention to what I was supposed to be paying attention to. And Jim's brother was actually our contractor, and everything was going great for the years before that, but evidently he ran into some problems. So he kept coming in and asking for money. And we got out in front of our skis in terms of paying him. And sure enough, when I started asking about these projects that weren't being done, I went over to one of the projects in lovely Cicero, Illinois, and opened the door. And what do I see? We had already paid him something like $50,000 to $60,000, and it was just a house with studs, nothing else.
Whoops.
Yes. So we got way out in front. It ended up that he said he was going to finish it, and we were, like I said, way behind, and we had investors and all the rest of it. He ended up not finishing it, so I ended up spending a lot of time replacing him with other contractors to get the work done. And I personally lost around $35,000 because we had not only paid him for work that he hadn't done, but we had to pay other contractors to come in and fix it. So it was a painful learning experience. Many of my lessons, I've never studied real estate in college, but I went to the School of Hard Knocks in real estate.
Absolutely. And the great news is there's a lot of folks right now learning from your School of Hard Knocks, so we appreciate that. Obviously, there are some big lessons there, but share with us kind of what you've learned from this experience, Michael.
Well, number one, I learned that even though we made money, it wasn't really enough money. I should have been focusing more on what I was really good at and what we made the most money on, which at the time was retail real estate. And so this was kind of like a part-time job. And then when the stuff got really busy all the way across the board, I just let things go on one side of it. And we ended up, because I had a large staff, so they were doing the payments and all the rest of the stuff. But like I said, my main thing there was I took my eye off the ball because I was too busy with this, which was kind of a hobby. And I should have been focusing more on, what we were good at, which was redeveloping retail shopping centers.
Yeah, that's such a good lesson. The idea that, hey, it's your partner's brother, so there's a guy we can trust. He's done this before. It's all good. He comes in asking for money. You assume that's because he's spent the money you've given him already on materials and labor and subcontractors, and lo and behold, that wasn't the case. So I think, this, I will say this is not that uncommon. In fact, this very thing happened to me. I'm happy to say that I was not the one running the project. We were buying a couple of brand new houses from a group, and they hired a general contractor who did about 90% of the work, but got paid 100% of the money. And same exact thing. He was just saying, I need a little more, I need it sooner. And they had paid him essentially all of the money, and then he was gone. So on their dime, not ours, they had to make good on the contract, but it meant they had to come out of pocket another $100,000. And that's a painful lesson. But I think the big thing is with any kind of construction, somebody has to check the work. And, construction loans, as you know, work on a draw schedule. A contractor has a scope of work, and typically you, as the person raising the money, the syndicator, the deal sponsor, you would be advancing that money, then going out to make sure the work got done before you kind of hit the next round of it. But the other side of the lesson, which I appreciate your candor on, is just when we get busy and we're doing something, the market gives us opportunities. So you think, well, I'm doing great in my main business, but here's this great opportunity, and why wouldn't we do this? We're real estate people. And it's just that whole idea of if you're going to take something on and expect the results, you're also going to have to do the work necessary.
Right. And like I said, it was my personal reputation, my partner's reputation. We should have just focused, maybe not bid off as much. It might have been a good thing. But the other thing you bring up on the construction part, on larger projects, if we have a lender, the lender typically makes us pay through a title company. So they put the money.
Yep.
And so even if it's a substantial amount and your lender isn't requiring it, you might want to look into that, because the nice thing about the title company is they make sure that there's no liens. And the title company is on the hook if somebody gets paid and they shouldn't have.
And keep in mind, most contractors are going to make a margin of somewhere between 8 and 15%. And typically the title company or escrow officer or attorney, whoever you use, is going to hold back at least that much till the end. So they're going to want to have a walkthrough. That might be that you do that, or it might be you have someone that goes, or the title company sends somebody to walk through and just make sure everything's done. Often, if it's new construction or even a rehab, there'll be kind of a punch list of things that get checked and, need to be addressed. And if you hold back a little bit of money, you're more likely to get that done than if you've paid your service providers all of their money and then expect them to do additional work.
Yeah. And I got to tell you, when my first son was being born, we didn't have insurance that covered the birth. And so I really horrified my wife, because I told the OBGYN, He wanted all the money up front. And I said, I'm going to pay you like a construction project and you'll get paid afterwards for the successful delivery.
Oh, that's awesome. All right. Well, some great lessons here, and we appreciate you being vulnerable enough to share. That's how we grow as real estate investors. We make mistakes, but then we learn from them. Thanks, Michael.
Thank you.
Hey, if you didn't get a chance to hear last week's program, go back and do that. Michael's main expertise, where he makes far fewer mistakes, is in retail, and he's got a really cool report he put out. Just send an email to token@realestateguysradio.com. If you didn't hear last week's show, that doesn't really mean anything to you, but you'll see it's a fascinating thing. So, Michael, great to see you again. Thanks for sharing your Halloween horror story.
Thank you, Robert.
Our final creepy crisis for this year brings together 3 tremendous lessons. We call these nightmares a trilogy of trickery. This next bit of miserable mayhem comes from a gentleman who has been investing in real estate since 2012 and been absolutely crushing it on YouTube. Let's say hello to our new friend, George Gammon. Hey, George.
Hello. Thank you. Well, I don't know if I should thank you for having me on this episode or not.
Yeah, you don't want to necessarily end up here, but the great thing is it's therapeutic. When we learn lessons from things that go bad, it's not just us that get the lesson. We can tell, and I know you've had a lot of success in real estate. You have rehabbed and flipped all kinds of properties. You've done super, super well, but not everything goes according to plan. Tell us your Halloween horror story.
Okay, first one is when I first got into real estate investing, I was buying them at the tax auction.
Yep.
So the county would foreclose on the people for not paying their property taxes. The catch is you really can't see the property. You can't do a tour. You can't get it inspected. You can try to get on there at night, with a flashlight, but that's kind of illegal. So a little gray area there. But I would go there, and the first day I bought 6 properties, just boom, right off the bat. So just kind of a baptism by fire. But as I kept going, I took an entrepreneurial mindset into real estate investing. And what I mean by that is I would look at a property that really had almost no margin, the foundation was cracked or something like that, one of these tax auction homes, and I would try to figure out a way that I could make it profitable.
Yep.
And instead of saying, and that's a entrepreneurial mindset, you're just trying to take lemons and make lemonade, as opposed to just saying, okay, you know what, that's going to be too much work, pass. Let's move on to the next one. Okay, and just waiting for that perfect pitch and then taking a swing at it. I think that was the lesson there. The second one is back then I bought a commercial property as well, because I wanted to try commercial. And I found that although it was great at the beginning because you had this consistent cash flow coming in, when I had a renter leave, it'd be a month or 2 months and there would be no tenant that took their place. And I'd go to my agent, I'd say, well, what can I do? Can I paint? Can I do improvements? Can I do? They said, no, because a new tenant's going to come in and they're just going to want to demo everything and do tenant improvements and just white box it. So you're pretty much stuck with it. And I found that the only competitive edge I had was price and lowering it. And I'm like, I don't like that. I like residential where I can just redo the kitchen, or I can do some landscaping, or I can paint. I can do something to get a renter in there right away. So I'm not here to say that commercial is bad. I'm here to say that as a real estate investor, find out what you like and what you're good at, and then just do more of that and less of what you don't like.
Excellent point.
And then third, when I first went to South America, I went in there and there was this area on the coast that was just booming. And I thought, man, this Ecuadorian coast, all these retirees are going to come down from the United States because they're on the dollar, and we're going to have inflation in the States. So their purchasing power is going to go down. So they want to come down here to maintain their standard of living. And the prices had just gone up and up and up and up and up. And it was in this bubble. And I just got caught up in it. And I said, yeah, buy. Let's buy right here, this land. Sure enough, I buy at a high price. And then their economy starts going down, and then the dollar goes back up because at that time it was very low. So the Canadians and the Aussies would come in and buy, because their currency was a lot stronger. So they had more purchasing power.
Yep.
But I got caught up in that. And plus I got caught up in an asset that didn't pay you to own it. So it was a double whammy. Not only did I not buy things when they're cheap and sell them when they're expensive, I tried to buy high and sell higher. But then I did that while buying an asset that was very illiquid and that did not pay me to own it. If I at least would have bought something, an existing property, and I could have just sat and waited and collect the $2,000 or $3,000 a month in rent, and it wouldn't have been as bad. But that was really a mistake that I made. So you live and learn, and I've never done that since. So I'm happy to share those stories. So hopefully most people don't fall into those traps.
Well, we appreciate you sharing your misery, and hopefully folks will take that under advisement. Great stuff. I wish we had more time to talk, and so that is why we're going to have you on the show next week. Next week, George is going to be our guest. We're going to talk about all kinds of great macroeconomic stuff, and he'll share some of what he's doing. But thanks for contributing to Halloween Horror Stories, George.
Thank you very much for having me. I really look forward to next week. Super excited.
Can't wait. Well, like a mummy, that wraps up the 2020 edition of Halloween Horror Stories. Huge thanks to all the brave investors who have the courage to share their moonlight misfortune with us. Whether things go wrong or right in real estate, you really can learn from other people's experience. So when things don't turn out as you planned, keep in mind that you're building your experience resume and becoming a stronger investor. Next week, we'll take a look at macroeconomics and why you should care. Until then, happy Halloween. And if you're not shivering and sheltering in place, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.